Hello and welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm your host. As a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. We're live on the floor with Ryan Pannell. He is the CEO of Kaiju ETF Advisors. Ryan, thank you for being here.
Thanks for having us here again.
So we've been chatting for a long time. You've got your ETF out, your very first ETF. It's now live, DIP. Where did this all come from? Tell us a little bit about Kaiju.
Well, we started, as you know, on the private fund side, and we've been working in AI-based trading strategies for half a decade, which in that business is a long time. So we were wondering how we could bring that to the ETF world, really, because there's nothing out there that's providing that level of technology to a broader investment base. So we kind of looked at our basket of strategies and spoke with you guys about what we might think about in terms of what worked best in an ETF wrapper, as well as with our lead market makers. And DIP was a strategy that we had in a slightly similar private format that was able to be converted to an ETF.
So your very first ETF goes live, of course, actively managed. How's it been going? What are people talking to you about?
I think it's sort of a two-sided conversation right now, or at least two streams. One is the level of active management. We just came back from exchange, and the wide speculation was we were the most actively managed active ETF, which isn't surprising because you're talking about 12,000% turnover per year, 20% rebalance per day, which gives people pause until we explain that this is the time frame in which AI is really, really successful at making high quality decisions. So there's an educational component there, and then of course there's some trust building that has to happen. We're coming off the back of 2 years of a lot of claims that different producers of high technology have made, and a lot of disappointment, whether from the tokenized asset and blockchain space or through to some of the more fringe AI speculative ventures. There's some trust that needs to be built there. And so that's really what our job is to work on that.
So AI, clearly a headline right now. For investors, for advisors, right, they're thinking about portfolio management. Where does DIP fit in?
Well, DIP for us was one of the more conservative strategies that we had. We wanted to start with something that was long-only equity, that was large cap, and we're talking about low to high mean reversion in large cap stocks with high probabilities of success. It's if you're considering a portion of your portfolio that wants to be S&P tracking, consider adding some percentage or taking some percentage of that and pushing it into DIP, to see whether or not, you see the outperformance that we're hoping to be able to deliver there.
Now, if somebody's listening and they want to learn more about DIP, where do they go?
Go to the website, dipetf.com. They can contact our team via the contact form there, reach out to me, or you, I guess.
Well, and of course, you can learn more about DIP and all the ETFs in the ecosystem at our website, etfcentral.com. Seriously, go there now, go to the screener, type in DIP. You will find everything you need to know about that ETF. That website, ETF Central, of course, brought to you by the New York Stock Exchange, the home of ETFs.